Welcome back to 02 Million Crypto. My name is GC. We are live. Yes, we are live. Joining me as I'm going to pick up a family member. Today, let's talk about a few different topics in the crypto market. First one being how Blackrock keeps buying hundreds of millions of dollars worth of Bitcoin behind the scenes. So in my most recent live stream or video, I talked about how Grayscale was selling off massive amounts of Bitcoin in a very short period of time. And as we talked about in the last video, we know that Grayscale is one of the biggest players when it comes to Bitcoin, and they've been investing in Bitcoin for a long time. Sort of one of the pioneers for an institutional investor investing in crypto in general. Not a lot of big institutional firms or hedge funds were interested in Bitcoin over the last 10, 15 years. And Grayscale has been, buying Bitcoin more than, let's say, institutions of their size relative to them. But we talked about how they were selling off a lot of Bitcoin behind the scenes and how that may be affecting the price. And what we are realizing now is that, or what we realized then as well, it was that Blackrock was accumulating slowly behind the scenes at the same time that Grayscale was selling off massive amounts. And now we're learning that Blackrock is buying actually hundreds of millions of dollars worth of Bitcoin behind the scenes. And that's important to know as a retail investor, or any investor for that matter, because although Grayscale has been in the crypto space for a long time buying Bitcoin, trying to turn what they have now into an ETF, BlackRock is the biggest investment hedge fund, you could say, corporation in the entire world. They own so much, they own trillions and trillions of dollars worth of assets and liquid capital that they pretty much are bigger than probably a lot of countries on earth combined. So an entity like BlackRock buying Bitcoin is very important. It's very important for Bitcoin's growth as a whole, because without big money coming into the space, we're not going to see the astronomical gains that we've always seen because of something called diminishing returns. And diminishing returns is something that when an asset space gets bigger, it's harder for it to grow. For example, Bitcoin always becomes more difficult to double in value and price because it takes more money to move the price as an asset or asset space gets bigger. So right now, we're at about a $1 trillion market cap for crypto as a whole. For the entire space to basically double, the entire space has to go to 2 trillion. And from 2 trillion to double, it takes another 2 trillion to make it 4 trillion. So it's always doubling the amount of money the space needs, or any space for that matter, to double in price. So where we're at now is, a $40,000 USD value for Bitcoin, basically somewhere around that price. I believe we shot up to 43,000 currently over the last night or so. But Bitcoin being bought by BlackRock, just knowing that, and it's not just a tiny accumulation that we believed a few days ago, it's actually hundreds of millions. Well, if it's hundreds of millions, that means they're buying a lot more Bitcoin than people thought in the first place. And we're going to get into later in this live stream why not one entity, or no one entity, can affect the Bitcoin or an asset space price in general. But when the biggest investment fund, hedge fund, whatever you want to call BlackRock, whenever they start investing in Bitcoin to this degree, that it's giving the green light for other large institutions and companies and people that are just trying to, and people and companies, institutions that are trying to, put their money in something that's going to show the highest return. And not to say that Bitcoin's going to give the highest highest return out of all cryptocurrencies in the next bull run. But these larger institutions aren't going to put most of their capital in Ethereum or Cardano or XRP, just due to the fact that they're not as big. And we're seeing Bitcoin kind of leading the way in every bull run when it comes to price action. And these large institutions, if by investing in Bitcoin first, are going to get a huge jump on all the other cryptocurrencies, because Bitcoin tends to move faster when a bull run begins. So obviously BlackRock is getting ahead of the game when it comes to this. And like I said before, no one entity can move the price, because companies and large corporations aren't going to invest large swaths of money into Bitcoin unless they see asset managers or big players like BlackRock invest their money into it, because they know that if an entity like BlackRock doesn't want to participate in this crypto world, they don't want to participate in this sphere where, you know, cryptocurrency is trying to become the next big thing when it cryptocurrency's trying to become the next big thing when it comes to money, finance, currency, wealth in general. So if an entity like BlackRock isn't playing along or playing ball, then these other corporations are going to say to themselves, well, we can't risk getting into something that the largest institutions aren't. So, you know, buying Bitcoin, well, if you think about it, Bitcoin's price is at $40,000. If they're buying hundreds of millions of dollars worth behind the scenes and not on just one occasion, that means they're getting so many Bitcoins in their ETF fund. I believe BlackRock's in particular is called iBit or iShare. I believe the ticker is called iBit, and the actual name of it is iShares. I could be wrong about that, but we have smaller investment funds like Fidelity and these other, you know, compared to average corporations and companies, much larger, but smaller fish and compared to BlackRock, as BlackRock remains, you could call it the king of the investment world or space. Now the green light has been lit, and all these smaller institutions are going to start putting their money in, but they also realize that they got to swim with the movement of these entities like Fidelity, BlackRock, and Grayscale, because they don't want to buy too much and have too much of a position if BlackRock decides to sell a large swath all at once. So buying can be a dangerous game. Maybe not as much for a retail investor, because as a retail investor, we are playing with such small liquidity to begin with that nothing that you ever buy as a sole individual retail investor, is ever going to affect the price. And knowing that can be an uncomfortable or even a scary thought, but you have to understand that in this world, corporations and institutions are prioritized over people. So if there's a large corporation or even small corporations that provide service, the world has turned into a place where, you know, the world has become a place where government, people in general, other corporations, other companies, the world in general is going to take the corporation side, the service provider side, over the ones receiving that service, unless a large amount of money is being used to match that or offset that. People are always going to be left behind, especially if they're not making enough money to, you know, deserve in the world's eyes those services. So as a retail investor like you and I, whoever is watching this video, probably someone just like me who isn't really, you know, a large owner of a company with large amounts of money. If you're just a retail investor like myself, you're going to have to, bite the bullet and understand that nothing you do will ever affect one cryptocurrency's price, unless you're trying to pump up a meme coin with zero liquidity in it at all. Buying any asset near the top of the crypto market when it comes to market cap, you're never going to affect it individually and solely. So it's a difficult pill to swallow because BlackRock and these large institutions can manipulate the price however they want to, basically. But at the end of the day, they all have to get the nod from each other, because if they don't, they're going to be losing large amounts of money when the market swings only a few percent, as you and I probably lose only a couple hundred or a couple $1,000s when the market moves only a few percentage points. These players are losing millions and millions of dollars. Excuse me. So those 2 points that I wanted to talk about kind of tie in together nicely. BlackRock kind of leading the way now, buying Bitcoin, giving everyone the nod to buy Bitcoin with large amounts of money. It's almost like there's a safety net there, almost like a peace of mind, so that these other corporations are going to say to themselves, yeah, we're in. And if BlackRock's in, we're in. And if they're in big, we're going to be in big. But at the same time, we have to watch when they sell, when they buy, and when they decide to, not really invest or take money out in general. They gotta watch every move. So now we've turned this regular traditional finance world of fiat money and stock market type of environment. Now we're looking at currencies, not necessarily currencies for a particular country, but decentralized currencies that were made either by a group of individuals that saw a better or had a better vision for the way money should work. And it's interesting because money flows into crypto, money flows out of crypto, and sometimes we're in periods like right now where the price stays the same. And this comes to my third point that I wanted to bring up today. When crypto assets don't move in price that much, you start getting reminded of what it's like to just hold fiat money, especially if you are investing in cryptocurrency for years now, or have been investing in cryptocurrency for years now. You're going to realize that, when the markets don't move, you're going to start remembering what it was like to just keep your money in a bank account. I mean, when I had money in a bank account, I didn't really know what volatility even meant, really, as an investor. I said to myself when I first got into crypto that I'm going to go all in on this because, I kind of had this gut feeling light bulb moment that this was a much better space to invest to in general than just maybe even the stock market or any other traditional kind of investment, rather than having my money in a bank account or just leaving it in fiat in general. So cryptocurrency is a space where we, as investors, we want volatility. And from 2021, when the markets were doing kind of better, which is when I got in, to see the markets come all the way down to a bottom basically in November of 2022, and now we're in 2024 and the markets have stayed relatively flat. Bitcoin kind of doubled from that bottom that we saw in November of 2022, and we saw a few altcoin crypto assets that have doubled or maybe a little bit more than doubled in the last year or so. But when it comes to that true volatility that we're all looking for as crypto investors, we're not seeing it in the manner that we want to, at least to the positive side, or at least for my own experience. I haven't seen that large bull run that many that have been investing for 4 or 5 years or longer have seen in the past. So volatility is what we're looking for, and when the markets are in a state like this, it kind of feels like when we buy cryptocurrency, it's like leaving money in the bank because we're not seeing any volatility really at all. So we're in a flat period right now, but we're continuing to discuss that and continuing to realize, learning further, that the markets, they may not, increase the same amount. They may not increase at the exact same time. They may not replicate each other exactly, but the markets seem to rhyme. And cycles are so important to understand. If you understand how a Bitcoin cycle works, or a traditional market cycle works in general, you're going to understand that, leaving your money in fiat may be the biggest risk of all. And if you don't invest your money into an asset space like cryptocurrency to look for those large returns that crypto asset investors are looking for, that extreme volatility to take us to the next level, we may never get from 0 to $1 million in crypto.